What's up, guys? I wanted to go over what an open low high close or an open high low close is and how I use it in the market. First things first, open low high close is just a formation and how candles move. You could see that in a bearish scenario, a candle would open, put in a high, and then put in a low, and then close. As you can see in this little drawing that I made, we get our open, high, low, close. And the same thing goes for a bullish scenario. As you can see, we get an open, low, high, close. This is just how you guys could look at higher time frame or even lower time frame candles, so you could pair them with AMD to pinpoint your IFEG entries. What is AMD? The AMD framework is accumulation, manipulation, and distribution. Accumulation is just when we are building up positions in the low volatility range. Manipulation is a false move that traps retail traders and sweeps stop liquidity before the real direction. And distribution is the real direction that we're looking for. So I'm gonna go into TradingView and show you guys an example of what open high-low closes look like and how you guys could pair them with the AMD to get better trades. Alright, so we're in TradingView now. You can see I have an example of a bullish candle, an open low high close, and I'm gonna get into why we are using this candle and what's so important about us using time-based candles instead of just taking any AMD or any PO3 setup. So looking at an open low high close, what do we see? First, we see market open up, put in a leg lower, distribute, and then put in a leg higher. What do we want to do? We want to be entering our trades when market puts in this low if our targets are highs. If our targets are lows, then it's vice versa, but this is just in a bullish scenario. In a bullish scenario, we want to wait for market to open, low, high, close. So whenever we're waiting for the 15-minute or the hourly candle to open, we have to make sure that we're looking for bullish PD arrays below the current price. Alright, we have our drawing now, so I'm going to explain the framework. First things first, we have to draw our draw on liquidity, which is going to be up here. And we have to wait for market to give us an open. If you guys see, what's the open? The open is right here. This little straight line is going to be our open. What do we wait for? We wait for market to give us some sort of manipulation into a low or into a PD array, so we could use that to push up and hit our draw on liquidity. What is the main thing that we're waiting for in accumulation, manipulation, distribution? The main thing that we're waiting for is the manipulation. And it's hard to pinpoint when the manipulation is actually going to happen and when the true manipulation is actually happening. So if we have time, if we have these candles that we could use to anticipate manipulation, then we know that we're taking the true manipulation of the day or the true manipulation towards our draw on liquidity. So we have our accumulation here. Let's say this is in this scenario right here. Once market opens up here, we can anticipate, or once the new candle opens up, we can anticipate that market wants to manipulate into one of these PD arrays and then use that to go towards our draw on liquidity. It's just pairing time with your AMD, and once you do that, then the AMD becomes way more pinpoint, and it's not just you're just playing a whole guessing game in the market. You could see how it pairs up beautifully in these examples. You could see, let's say this is the accumulation right here, and then we got our open, low, high, close. What does that look like? That looks like accumulation, an open, manipulation, low, high, distribution, close. And that's all open, low, high closes are, and that's all you need to use them for. And Yeah, I'm gonna go into some real market examples on FX Replay, so I'll be right back. Alright, we're on FX Replay now, guys. I'm gonna look for a trade. I'm gonna try to keep this part raw and uncut so you guys can follow along with me. Maybe try to use this framework that I use to look for trades yourself. And yeah, I'm gonna start looking for our draws. Start looking for just anything. I need signatures and price. First things first, I see that we have this intermediate low here. This low is intermediate because we have this gap right here that we were inside of. We also have this hourly gap up here. And let me scale down. We have this high. Oh, what is happening? We have this high right here. And yeah, let's see how market plays out. Looks like we want to start pushing up. Oh, maybe we want to push down. Let's see. Oh, this is looking pretty good, actually. Yeah, I kind of like this. Oh, this is perfect. We're getting accumulation right before 10 a.m. is about to open. About 10 a.m. opens up here. This is going to be our open. Let's see if we push lower or push higher. We have two scenarios here. Either we push lower, come down to here, come down to these lows, and use this to push up, back up to these relatively equal highs, coming up to this intermediate high. Or maybe we could sweep all these highs and use this to come down to this intermediate low, which is probably more likely in this scenario. Oh, we start pushing down. Even though I said the other one was more likely, I'm still liking this price action here. Since we did just hit an intermediate low and we did just use a whole bunch of lows here, a bunch of stacked lows, I'm looking to get into this trade quickly. Boom, this is perfect. We form a high. We got to change the state of delivery, and we get an inversion. We have this 3-minute here, but the structure is just too perfect not to just take this 2-minute. I'm really liking this here. We have these low resistance highs here. This now becomes our high resistance low. And yeah, I'm really liking this trade. Setup is beautiful. I'm gonna take it all the way up to there, and I'm just gonna put my stop at this low right here. This is perfect little example for you guys. You guys can see we opened up. We have our accumulation. We open up, manipulate lower into a high time frame PD array, which was our 1 hour intermediate low. And now we're going to use this to distribute to these highs, hopefully. This is what I'm anticipating. We get a strong move. And you could see this higher time frame candle. Now we have our open, low, and now we're waiting to put in our high. I'm anticipating that our high is going to be put in at this intermediate high that we made up here. Boom, move break even there. And now this is a risk-free trade. Just let it play out. Oh, that is slow. Oh, this is taking a while, but we end up hitting it there. It took us the whole hour, but if we come up to this hourly candle, you could see what happens here. Just like our example at the start of the video, we get our open, low, manipulating into this intermediate high, and then we get our, not intermediate high, intermediate low, and then we get our high distributing into this hourly gap or this hourly intermediate high. So this is perfect. This is a perfect example of how open, high, low closes work. Yeah, that's going to be it for today's video. Tune in tomorrow morning for the recap. I know it's pretty late. This is a pretty late upload, but I just wanted to get this video out there. because I was requested by one of my friends to put out a video like this. Not to put out a video like this, but I offered to put out a video like this. And yeah, check y'all boys out. See you guys tomorrow. Hopefully I win so I could post another good recap for you guys. But even if I lose or if I go break even, I'm still gonna post it. See you guys tomorrow. Follow my Insta. Bye.